Good morning, you mad lads. As promised, we are going all out on these videos because there simply is just too much information and content that needs to be discussed. Yesterday's morning video performed pretty well, and many people were content about the drop of the video. I know I said I am going to be uploading 2 videos per day all the way until Friday, but I will definitely keep that in mind. This is not the last time we will be doing 2 videos per day. There is definitely an appeal, and there is just enough content at the moment to make this possible for now. So, yesterday's video received a very strong positive reaction. People absolutely loved the content, as these little dive into the framework by which Wall Street institutions and traders abide by seem to be what people are interested about. Well, do I have an even better video for you today? Today, we are going to review and observe a very famous hedge fund crumble under pressure of an investigation, and dissect exactly how it was exactly that he tricked the system to come out unscathed. We have some goodies to talk and discuss today, so before we start, I will just ask that you share the video with other fellow investors if you found it helpful. Let me quickly disclose that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience and knowledge on the matter. Shout out to all my donators and pledge supporters on Patreon. You guys are literally my bread and butter. There is not a lot of you, but to the few ones out there, thank you so much. Alright people, let's dive right into Tendy Town. Rats and hedge fund managers are not that different from one another, except for the small difference in that rats induce disgust in humans because they are dirty, scary looking and carry diseases, while hedge fund managers are much better at hiding those same traits through superficial mannerism and fancy suits. But what happens when we place a hedge fund manager under pressure? What happened when they can no longer hide under the cape of ambiguity? Today, you are about to see it for yourself. Very few men like Steve Cohen exist. The guy is an absolute expert when it comes to trading, with so many decades of experience under his belt. But there is something that makes this man stand out from the rest. You see, Steve Cohen, though clever, which is a character trait that nobody in the world can take it away from him, is not all that is made to be. If we go by the famous book called Black Edge, we get to view the man by his actions, and not what he pretends to be on camera. The truth is, Steve Cohen made his fortunes by insider trading. He developed a system by which he gets to remain exempt from guilt under the eyes of the law. You see, on Wall Street, everybody speaks. The trick is to not make it so obvious that you base your work around the rumors that you hear, because it sets an automatic ping on you. You want to hear everything being said, and act without liability. To do this, Cohen developed a strategy. He would have his employees that traded come and rate certain trades under a numerical system, with one end of the system essentially saying the trade was bad and the other end of the system suggesting it's a safe bet. Based on what they heard plus the research and analysis these employees did, they would then come to Steve Cohen and give him a numeric rating. Steve Cohen would not really go into detail, at least in the empirical evidence collected by the SEC and governing bodies when he went to court, because asking too many questions can make you well informed, and when you are well informed you become liable under the eyes of the law. In the year 2013, Cohen's company SAC Capital Advisors, which was a group of hedge funds, pleaded guilty to insider trading and agreed to pay $1.8 billion in fines. It remains one of the biggest contemporary criminal cases against a hedge fund, and it brought a lot of spotlight into the current epidemic that exists in Wall Street. Now, we know that Steve Cohen was able to get away relatively unscathed. However, that is not what I want to show you guys today. What I want to impress upon you is how human, and how fragile these people really are. Under the mannerisms, superficial impressions, and general attitude of authority these clowns like to exude, lies some incredibly frail egos. In the videos I am about to show you, which were taken back in 2011 during a civil suit, Cohen describes his firm's trading rules as general guidelines, and then goes to explain that he also then gives his traders a bit of flexibility to impose their own judgments when making deals. I want you to take notice of how Cohen initially appears and carries himself, with an air of superiority, because soon after this clip, we are going to watch him crumble down to basic instincts. This is about to get super high school cringe, so good luck and enjoy.
The following restrictions, which include the restriction on not passing on material non-public information, must be strictly adhered to. that is inconsistent with what you've just described as what your policy is, correct?
You know, when you take a paragraph out of context, I really take objection, and because I look at this as a manual, okay, and it's a manual of guidelines.
Okay, and this guideline is that the following restriction must be strictly adhered to. So it doesn't have to be strictly adhered to. It can be adhered to sometimes, and sometimes, if you've got good judgment, it doesn't need to be adhered to, right?
The vast,
Object to the form.
the vast majority of the time it is adhered to, but there are times when I can think of situations when it doesn't have to be.
Okay, but this doesn't say the vast amount of times, most of the time, some of the time. It says strictly adhered to. The fact of the matter is that language is not consistent with the practice inside SAC as you've described it, right?
Object to the form.
In my mind, we're talking about judgment.
So you don't have to strictly adhere to it. You can adhere to it in your judgment. Is that fair?
Object to the form.
In my view, employees adhere, and sometimes strictly adhere to this, but because of their experience and their ability and their judgment, they might. I'm not saying they would, but they might, because of their experiences, and they've been in that situation before, they know how to act.
And therefore not strictly adhere to this restriction, correct?
Object to the
Because they
form.
know how to act, they are adhering to the desire and the intent of what the organization wants. And that's what this manual is there for.
Okay, well, the manual says you must strictly not communicate that information to other people. You're saying maybe you can, maybe you can't. I want to know which one is the policy at the firm. The
Object
one you
to the form.
articulated or the one that appears in writing in this manual?
Object to the form.
I'm not going to change my statement,
I want to know which one's the policy.
and I'm not going to change my statement.
You don't have to change your statement.
Okay?
Which one is the policy?
I'm going to say it again.
Go
You can
ahead.
be here all night if you want.
Well, you could answer my question.
Okay? I'm answering your question.
No, I want to know which one's the policy.
Okay? I'm answering the question the way I want to answer it.
But it's non-responsive, sir.
Okay, I'm answering it because I believe that the intent of this is to have the employee act in a certain way. There may be a time, and I can think of times, when he uses his own judgment because he knows how to act in a situation.
As you saw, Steve Cohen was incredibly hostile and combative during the deposition, which took 2 days. However, as interrogators cleverly boxed him into a corner, using his own shortcomings from the lies and holes in his stories against him, Cohen eventually starts feeling the pressure and becomes unable to deliver on some of the most basic points. Again, take note as his demeanor starts to change.
You're the head of SAC, right?
Doesn't matter.
That wasn't my question. You're the head of SAC, right?
That's correct.
Okay. And you take compliance seriously, right?
Absolutely.
Right. And you take not trading on material inside information seriously, right?
Very seriously.
Okay. And have you ever taken upon yourself to actually read the rules?
I rely on my counsel.
Is the answer no, I haven't read the rules?
Well, I might have read them, I just don't remember.
When asked if he read the rules, Cohen admits to relying on his counsel. When the interviewer, who is attorney Michael Bowie, clarifies that the statement then should be interpreted as, and I quote, "The answer is no, I haven't read the rules," Cohen quickly jumps and defensively retorts with a, "Well, I might have read them, but I just don't remember." Now, let's watch him crumble. The interviewer, attorney Michael Bowie, then presents Steve Cohen with an interesting question. He goes on to ask him if he would feel comfortable trading a security if a tip or suggestion came to him from a reporter about some type of negative catalyst that will affect that security's price or value negatively. Again, I must ask, pay attention not only to what he says, but his demeanor and tone. Enjoy.
And you say it would be okay for members of your firm, of your group back then, to buy, knowing that a report is going to come out that's going to drive the price down. Do you have the same answer if they are selling and shorting?
Well, it really comes down to where they heard that. And if they heard a rumor, I think it'd be totally appropriate.
Okay. If they heard it from the reporter that he was coming out with a negative story,
I wasn't on that phone call, so that's a supposition. I have no idea what was in that conversation.
what if they sent you an email that said the reporter told me he's coming out with a negative story, is it your testimony it would be okay for them to short?
Object to the form.
If the story was not coming out in a relatively short period of time, I would say there was ambiguity on that. I think it might be okay.
Cohen became unable to answer this question, struggling to find a suiting response. To such a question whose answer appeared to be so obvious, Steve Cohen is unable to answer as straight, most likely because in his mind there is a brewing conflict about what the truth is and what he should say. Literally, at the very end, the only answer he was able to give out was that yes, if the story wasn't coming out in a relatively short period of time, and there was ambiguity on it, he said it would be fine to go through the insider trade. At this point, he seems the calmest and most sincere I have seen in the entire interview. I mean, what else could you possibly want, right out of the shark's teeth? Now, though lying in Wall Street is an essential character trait if you aim to have a successful and long career, questions like the ones on the interview really put people out of a place of comfort, because they are aware that they cannot come up with suitable answers if they are not intending on being honest. The mind gets in a state of conflict, where it is unable to produce the outcome it wants. It is incredibly harder for a liar to answer a question about what you would do in an imaginative scenario because it is harder to disguise their true nature. One cannot deliver on something if it is unable to imagine it in the first place. Here is an extra short clip of Steve Cohen towards the beginning of the interview when he was more arrogant and self-assured.
The way I understand the rules on trading and inside information, it's very vague.
Are you familiar with Rule 10b-5-1?
No, not that. You'd have to explain it to me.
Okay. Do you have an understanding about whether, when in possession of material non-public information, you're ever allowed to trade security?
That's not the way it's explained to me.
He describes federal security laws and regulations as vague, and then asks for an explanation by the SEC. He is deflecting for sure. However, I did bring this up because David Einhorn, another hedge fund billionaire, made a statement recently about the SEC and the Fed. He complained that in regards to the Fed, they are not doing their jobs correct, because they aren't fulfilling their most basic role in the market, which is to keep inflation in check. With then now willingly allowing inflation to rise above its long-term targets, Einhorn states that he does not like the new laissez-faire attitude about rising prices. Now, as you know, I am happy about these issues happening because the more things start to crumble, the closer I believe meme stocks get to the squeeze. But, in a more practical sense, what is happening outside of my own benefit in it is absolutely disgusting and incredibly sad. To see inflation eat up everything as it is currently happening is a testament of the extent that our own elected officials have failed to do their jobs. I thought I could not agree any harder with David Einhorn, but the man was saving his harshest words for the SEC. He stated that it seems to him that the SEC has absolutely no interest investigating the spikes and general weird pattern behavior in the stock prices of tiny companies such as GameStop and other meme stocks. They don't care about listening to the statements made by prominent figures such as Elon Musk, which he correctly assesses as something that pours jet fuel on the GameStop squeeze. Companies and managements, he states, are emboldened enough to engage in malfeasance have little to fear. Einhorn then made statements calling Congress to grill absentee regulators. This man absolutely said it perfectly, and I am in pure awe at the fact that I am impressed and inspired by a hedge fund manager to a degree. I mean, I can't break this down any more than it is. The SEC does not regulate or care about doing anything in part because they don't want to deal with smaller companies when they would rather focus their efforts on protecting the big money, where most billionaires are trading. This is why GameStop and other meme stocks are so powerful. This is our stand. This is where we fight. GameStop and other meme stocks will become the greatest stocks of all time. I hope this little video was able to produce some further insight into the minds of the people on Wall Street. Though not a wrinkly video, you at least have a more attuned sense of awareness into the ongoings. I have no doubt shorters of meme stocks at Wall Street are much like Steve Cohen, and it will be those same character traits that will crush their bets. Thank you for making it to the end of the video. Let me know how you feel about this down on the comments below. I want to be able to keep improving videos so that you guys can understand what's going on in a much easier way, and feedback is crucial. If you don't mind, drop a like on the video to help the video get around. If you want to help this channel, I have provided links which will be in the description. This goes a long way in helping me be able to pump videos out, as I have quit my job and abandoned other activities to do this full time to keep you guys informed. Remember to follow me on Twitter if you haven't already, and I hope to see you guys on the next one later today. To the moon.